This video is going to introduce financial statement analysis. So there are careers in financial statement analysis, and people who do financial statement analysis are called financial analysts. So we can look at a financial statement and we can see the numbers, but we can gain even more insight when we start comparing. So let's look and see all the ways we can compare. First, we can compare horizontally. And when we compare horizontally, that means we're comparing from year to year. We can also compare vertically, and that is when we compare items in a statement to one another. And among those, we can compare one company to another company in the same industry, as we discussed in our lecture. So we have lots of ways to compare, and we're going to be talking about ratios in this chapter. So when you think of a ratio means divide. So you're going to be doing a lot of division in your calculator for this chapter. You won't have to memorize any of these ratios. You can look at them and apply. This is a brief recap. So horizontal analysis, you're going to be comparing from year to year. So here you're going to be comparing 2015 to 2016. And I'm curious about these numbers because if I look, I can see I had more net income in 2015 than I did in 2016. But yet my total sales was the same. Look at the total sales. So I need to look at these numbers and see what caused the decrease in my bottom line net income. So the first thing I'll do is I will find what my change was. So the change is from this year to last year is nothing for sales. It didn't change. I'm just going to copy that formula down. And I can see there was a change in cost of merchandise sold, and see a few that affected gross profit and change in interest expense. So the horizontal analysis is actually figuring out the percent change. So the way that I'll do that is I'll say net change divided by the 1,000,005, and then I will copy that formula down to get my percent change. And I may have to, there we go. Okay. This one, of course, this one's just a heading, so I'll just delete that. Okay. So I can see that I have a 33% increase in the cost of merchandise that I sold. In other words, I had to pay more for the merchandise than that I was selling, but I didn't mark it up anymore. So that is what caused the decline here. Then I didn't have any change in administrative expenses, but I did have a change in selling expenses. It actually decreased, so that was a good thing. It just didn't decrease enough to keep me from losing money here. Okay, my interest expense. it went from 75,000 up to 100,000. So it looks like I'm actually having to pay more interest on something, some amount of money that I borrowed. So this is called a horizontal analysis because I'm comparing across, meaning I'm comparing from 2015 to 2016, and that's my percent change. Now, if you want to see this, you can, let me move this up if I can for a second so y'all can see. You can highlight your sales here and click percent and see it as changing it to a percent. Now, how would you do that if you didn't have a spreadsheet? Well, you would multiply it by 100. Okay, so now let's talk about vertical analysis. So I need to get rid of this. Okay, and I'm going to do a vertical analysis. So we're going to be comparing items up and down. So in a vertical analysis on an income statement, we're going to compare everything to net sales. And I'm actually going to do 1 year. So let me delete or clear. Okay. So I'm actually going to be looking at this 1 year. So 2016, I'm going to look at everything as a percentage of sales. So as a percentage of sales itself has to be 100%. So I'm going to do sales divided by sales. Okay. So I need an absolute reference here. So I'm just going to put the $ in front of that. And that will always divide everything I copy by by sales. So, and I'm also going to, let me change the format. So go up to your Excel functions here and press percent. So now it will be as a percentage. All right. So let's copy our formula down. So as I would expect, cost of merchandise sold is the highest percentage. So I'm spending 40% of my sales. 40% of it is my cost of merchandise sold. So that means 60% is left, or 60% is gross profit. The 20% is selling expenses. 10% is administrative expenses. And that leaves operating income to be 30% of my sales. Interest expense is 7%. And net income is 23% of my sales. Now, this is meaningful information, but it could be even more meaningful if we took it and compared it to last year's, or take it and compare it to others in the same industry. This allows me to compare different size businesses to myself to see how I'm doing. From there, you will learn other ratios that are going to be meaningful. For example, we learned how to calculate the current ratio. You learned how to calculate the accounts receivable turnover. You also learned how to calculate the number of times interest charges are earned. And all these are formulas that you will apply. And then you will read the definition of the formula so that you will know the meaning behind that formula. And again, the actual number that you get is really not that helpful until you compare it to either a prior year or to another company in the industry. So I hope this video helped you understand horizontal and vertical analysis a little better. If you have any questions, let me know.